Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look on the gold market. So the gold market keeps the intrigue of the direction, because as we said yesterday that theoretical market looks a bit heavy and overall price action is really not inspiring, but it stands stubbornly above these lows, and these lows are the crucial point, because while market stands above them, it keeps chance on the possible upward continuation and completion of so-called bread and butter trade that we consider it. But currently it just could be treated not in relation to the Jordan Napoli terms, but just as a momentum trade, because we have the strong upside momentum, strong rally, and that is the first pullback after the rally has been completed. And it means that the rest of the momentum still stands here, and it should push market sooner or later for a significant retracement. That's actually what we're watching for. And from the daily chart, guys, the major pattern that we should keep an eye on is this wide range, so from these lows to this top. Why? Because this actually, guys, the hedge doji pattern on the weekly chart. It indicates indecision. The market stands inside its range, and further direction will depend on the direction of the breakout of this pattern. And take a look why this low is important, because that was attempt to abandon, to break the range of the weekly pattern. And that attempt was not successful. So market has tried to pass through these lows, has failed, and return right back up. So I have this. I suppose that could be kind of the wash and rinse of these lows. So failure breakout to drop out of this range and continue downward action. That attempt has failed. That makes me think that as it has become the fake breakout, failure attempt of the breakout, so market still could be bullish, and it could keep chance on the further upward continuation here. That's what I'm thinking about the gold market. So at least until market stands above these lows, you better do not take the short position here, because that could be risky. On the 4-hour time frame chart, guys, take a look what also we have. Market has not shown the downward continuation directly to the bottom of this so-called flag pattern or consolidation that we were considering. Has formed two side-by-side bullish grabbers, and now is coming up, trying to break this resistance. The minimum target of the grabber is this top, so market should climb at least slightly higher than this level. But we need to keep an eye on the C point, because if market will take it out of this point, it will form simultaneously the bullish reversal swing up, because this upward action will become greater than this one, and it breaks the tendency of the lower lows and lower highs. It will simultaneously erase this A, B, C top pattern, which will be also important. Trend currently stands bullish here. So it means that if somehow you still have the bullish positions, if you're keeping them right from these lows, when we discussed this opportunity to take the position here, well, you could continue to keep them. Just do not forget to manage your stop. So currently, for example, you could move it slightly below this level. For others who do not have longs, it's definitely not time to go short, just by the reasons that we have just discussed. And second, it would be better to wait for some more clarity, more clear signs of the bullish action. So I think that we should wait at least while market will break this area and will continue upward action. That's important. But be prepared for that. But definitely, situation stands so that it would be better to not take the short positions by far, at least on the background of this situation that we have. On the hourly chart, well, take a look. The market has completed the harmonic swing, but it has not followed down as we thought about it. We said maybe market could show the deeper retracement right back up to the 1540. But market stands stubbornly here and shows early upward reversal. Whether this will be a real upward continuation, we will see. But currently, in general, this price performance mostly carries the features of the bullish price action rather than bearish. And that, while we think that currently it would be better to not take any shorts. Besides, the divergence that we have discussed previously still stands here. Nothing can change actually, and potentially we could get, for example, kind of the ABCD pattern here easily. So that could happen. Maybe in particular this pattern will finalize the action to the 618 resistance of the whole downward action, which actually the target of the momentum trade on the daily chart. So we will see.